We're just getting started here. We've got an awesome event, the 2025 Investing Outlook event. What are the best investments for 2025 as an investor? What are the biggest risks? What are the opportunities? Of course, with Trump being elected now, there's some new changes there. We've got some of the brightest minds that I know, some amazing people that I can call friends that I've known for a while. And just, it's awesome when we can get people together that love to talk about investing. We get things that we would never have happen before, as far as just different reflections. You can hear a certain expert, you can hear a certain person. I wanted to put up a poll real quick before we welcome our panelists up here. Just who are you most excited to hear from today? So I'm going to go ahead and launch this here. So go ahead and click which one. We've got the three panelists and myself there. Who you're most excited to hear from. So let's see who's going to be the most popular before we welcome them up. And we've got most people. A few people have. Oh, looks like we got David Morgan is doing very well here. And we'll go ahead and get this poll going, and then we'll get started. So I'm going to go ahead and minimize this. Go ahead and vote on that poll. I'm going to welcome these guys up here. So I will welcome them up, and then we're going to do a quick intro for each person, and then we're going to have a great conversation. We will have some Q&A here at the end. So again, we've got that chat box going. Feel free to chat with other people in the group. You can chat. You should be able to chat with panelists as well, and we'll be able to take some of your questions towards the end. So all right, let's get into intros here, and I'll share the results of our panel here in a minute, or our poll, excuse me. So we have just, again, three great friends here. We have Russ Gray, who's formerly with the Real Estate Guys podcast, and he also is part of the Collective Inner Circle, as well as the Raising Capitalist Foundation, which they teach kids how to become capitalists, how you can teach your kids to do that, which is awesome. Welcome, Russ. How are you doing today?
Good. I had to unmute myself. Yeah, great. Excited to be here with you guys.
Awesome. Really glad to have you. We also have David Morgan, who is known for the Morgan Report, for many books. Just heard about David for a long time. We've become friends the last few years. He also has a new show, a new publication. He's putting together a show called silversunrise.tv about the spiritual side of money. David, how are you doing today, brother?
I'm doing well. Thanks for having me.
Awesome. Great to have you here. And then we have Dr. Tom Burns in the house. Awesome. From Carbon Capital, raised several hundred million for real estate. Also wrote the book called Rich Doctor, and has done all kinds of stuff within development, multifamily. They're doing deals. Really excited to have you here, Tom.
Great to be here, Bronson. Thanks.
Awesome. Let's go to our poll real quick and see how we did on the poll. It looks like we've got 42%. Number one was David Morgan, and he's the most popular. And I think, can you guys see the poll? Are you guys able to see this? I don't know if everybody can see this. Okay, maybe in the chat, you guys can let me know you can see it. No, you can't see it. Okay, how do I publish this poll? Okay, I'm gonna end the poll, and then I can share it. Okay, so we'll share this. Okay, you guys should be able to see that now. Everybody can see that?
All right.
All that was a popularity contest,
Looks
right?
like I got some work to do.
Yeah, me too. You and me, Russ. Awesome. Well, we're going to go through and talk about, especially right now, I'm going to do a couple more polls here in a little bit, but let's talk about what just happened. Because we have, obviously, if you're watching yesterday, Trump is now in office. There's some changes. There's a new sheriff in town, per se. We have Trump tariffs. He's talking a lot about tariffs, how that's going to impact the economy. Also, the Trump tax breaks from we had from 2017. Those have started to really phase out, at least for real estate investors. I just want to see what your thoughts are, either from an economic and investor standpoint, of how do you see some of these changes, even some of the executive orders that have come up, really impacting investors today. Who would like to start with that one?
You just tossing it to any of us?
Tossing it to whoever's most eager.
All right, I'm gonna roll. I'm gonna roll because I'm trying to boost my thing. So hopefully, opening my mouth won't put me further in arrears. But I think we really have the advantage. This is not a brand new president. We're getting a chance to have really a second term from Trump 1.0. So I don't think it's going to be exactly the same. But I think that we learned a lot about the way this guy thinks and how he operates. And of course, we have now, as we're recording this today, we've got at least 1 day plus a little bit more of executive orders to get a little bit of a feel. A couple of things have come up since Trump 1.0 to the current administration. And one of the big ones is Bitcoin. The Bitcoin Strategic Reserve launching the Trump meme coin. But one of the things that came up prior to him being inaugurated was him really threatening the world that anybody that attacked dollar The dollar is a reserve currency that tried to de-dollarize. And of course, we get this big BRICS movement. I'm sure David's been paying close attention to that. That explains a lot of the driving of the price of gold, which is a proxy to the true strength of the dollar versus, what goes on with the DXY, which is the index of comparing the dollar to other falling currencies. And of course, gold has done real well in dollar terms, which means the dollar's done very poorly in gold terms. And a lot of that has been driven by central banks around the world looking to de-dollarize. And so if you're not familiar, BRICS is Brazil, Russia, India, China, South America, plus a whole bunch of other countries that have joined this coalition to really work on the project of getting out from underneath the dollar. Trump said, if you guys do this, we're going to lock you out of our market. So he's playing hardball with them. Now, I've had a lot of people, including Brent Johnson, that I've talked to, people go, hey, this BRICS thing's no big deal. Even George Gammon, my buddy. But to me, if it wasn't a big deal, Trump would have said something about it. And so I think it is a big deal, and it has been a big deal. So the rest of it to me is he approaches the economy, I think, a lot the way you would expect a real estate developer to approach it. He looks at all the different components of cost, as far as I can tell, and he begins to systematically attack them. He's going to push for lower interest rates. He's going to push for lower energy costs because energy is the economy. He's going to reduce regulation because as a businessman, he understands that regulation is a burden and it costs a lot of money. He's going to push that down. He's going to be, let's see what else. He's probably going to be pushing for a little bit of a weaker dollar because he's going to want to be able to have strong exports. He's going to try and level the playing field with the tariffs, really work on reshoring, which is something he wanted to do before. I think he's going to aggressively go after taxes again strategically. Our mutual friend Tom Wheelwright says that the tax code is how the government tells you what they want you to do. And I think he's going to use that tax code to direct capital investment like he did with opportunity zones, like he did with the accelerated depreciation into capital investment to stimulate money going to work where it can be put to use. I think he'll be an aggressive user of debt, just the way a real estate guy would be. Now, he's not going to go into debt to give money away. I think he's going to go into debt to invest in productive outcomes and make a profit on the debt. Because again, this is the way a real estate guy thinks. So those are all the things that I'm expecting. The challenge he's going to have is threading the needle of aggressive economic activity and growth without goosing inflation. And I think if he really gets enough productivity, I think that he has a chance to be able to do that. But that's the thing I'm watching the closest. When you start seeing a lot of economic activity, inflation is a byproduct of velocity, how quick the economy is going. And if he makes it go faster, then he's going to have to really have a lot of production and removing all those components of cost, including government spending, all at the same time. So it's a real juggling act. But, that to me, as I've been thinking about it for these last several months, when it became, I think, maybe pretty obvious, he had a really good chance of winning what I thought he was going to do. And that's kind of the way I see it.
Yeah, thank you. Tom, anyone want to add to that?
Yeah, I'll go because I don't have to say much after Russ. I just came here to take notes. But I think mostly I'm in the real estate world, so I think Trump's good for business. He was good for business 4 years ago. We all did really well. Love bonus depreciation. I keep hearing rumors that it's hopefully going to come back. A lot of good things for us in the real estate and the investing world. I think with the tariffs, I've seen a really brilliant presentation on how the tariffs can be inflationary or non-inflationary. I think Trump himself I think he's going to probably be a little bit inflationary for us. And I don't think he's going to have much power to lower interest rates. And so, at least on our end of the world, we're counting on interest rates not dipping down much in the future. And so it's sort of a new level set for us. But I think we will have 4 years of entertainment, unique business climate. I think it's all going to be positive for those of us that like to produce things and create value and that are capitalists. And so I'm excited about it. I just wish I understood all of everything Russ just said, but I think we're in for a good ride, but I think he is going to have his work cut out for him. I think cutting costs as well as at the same time as creating production is going to be quite a tight wire to use Russ's term.
Thanks. I know both of you guys are real estate guys. I'm a real estate guy. I do other investments as well. David, I know you're primarily natural resources and metals. How have you kind of looked at how Trump coming in office now and how that's going to impact investments, both from what you do as well as kind of broader economic factors?
Yeah, well, thanks, Russ and Tom. I think you did a great outline. I think the only thing I could really add there is you just did that poll, and the number one concern was inflation, closely followed by interest rates. So the inflation situation is primarily a monetary phenomena. So if you just keep printing, especially if you print for no given reason, in other words, if you have judicious use of debt to build something, go into debt to build a house, apartment building, a warehouse, or whatever, you're getting productive use of the money, and there are good uses of debt. If you just print it to keep the stock market high or these other uses to give to other countries or whatever, really not a productive use of debt. So the inflation is a concern, and I think it'll continue to be a concern. The Fed has hardly lost control, but they do not have as much control as they have had in the past. The Fed sets the federal funds rate, the discount window. Everything from there is actually in the market. Now, they can do things like Operation Twist. I'm not trying to talk over anyone's heads, but they can buy the long end of the yield curve. Banks are aligned with the Fed. They kind of do what they're suggested to do. But nonetheless, even with inflation coming down in velocity, so it's going up less fast than it was, doesn't mean it's over. And the interest rates at the long end are actually on their own. In other words, even though they're ratcheting down interest rates by dropping it at 50 basis points or what have you at the last FOMC meetings, the bond market's signaling something different. So this is important to know that the markets actually do have a mind of their own, and that eventually the market has the final say. As I'm very fond of saying, because it keeps me humble, is that the markets know more than I do and always will. And even though it might be illogical or not make sense at the time, the market is the market. So I try not to argue with the market. Having said all that, the only thing I think I'd add is this tariff situation. I mean, being a free market thinker and looking at history as probably the best guide for me going forward is what happened in the Great Depression. It took it from the Great Depression to the Great Depression. And that was a Smoot-Hartley Act. And when they put up tariffs during the Great Depression, it really caused the Depression to become worldwide. So I'm really not in favor of tariffs at all. I think it gets passed on to the consumer. Just like most things, when it adds the cost, you pay for it as a lumber yard because there's a tariff on lumber. But what do? When you sell out the back lot to your construction guy, he's have to pay for it. And what's he going to do? He's going to put it on the price of the house. So really, it doesn't help us. Now, having said that, if we have a true free market, we have competition where you make the best product at a lower cost, you should come to the top. That's the basic idea. The problem with that is, well, China's making, let's say, electric vehicles and they're cheaper. But how much cheaper are they? If they're subsidized and they're getting steel from China at half the cost of the free market, is that really the true cost of that automobile? So it gets very convoluted. I'm not trying to take anyone down the rabbit hole. I'm trying to point out it's a very complex system that isn't fair from the get-go because the way the system's designed by trying to oversee a free market with central planning. And that is something that I'm basically fundamentally not in line with most of the time.
Yeah, that's great. Thank you, David. I realized I forgot to introduce myself. So I just, for those that don't know me, I know there's a bunch of new folks here. So you guys know who's this bald guy talking, hosting this thing. But my name is Bronson Hill, CEO of Bronson Equity. Wrote this book behind me here called Fire Yourself. Talk about passive income, passive investments. We've raised about 45 million for different alternative assets, doing a lot of cash flow investments. Now, I also have this guide that's a free gift to you. It's actually about how to use inflation to your advantage. So this is like 40 pages. If you text to that number, you can basically get it for free. Precious metals, borrowing, real estate, some unique strategies. Actually, I learned one of them from Russ about borrowing against precious metals, value precious metals to go and get other assets. So anyway, wanted to continue down this path. We did this poll, and it seems like the number one thing people are interested in is inflation. That's what we want to share this guide. But let's go in and just have a little touch base on inflation and some strategies to mitigate inflation. Obviously, we know we can buy real estate, but what are some other strategies involving buying real estate, buying metals, borrowing, anything that you have? Maybe we'll start with Tom. We'll kind of work our way back around.
Yeah, sure. And I'll be sure. I mean, I'm a real estate guy. Pardon the not taking your title, Russ. But I'm a guy that works in real estate, and so real estate's a great hedge against inflation, and you got fixed rate debt that you can pay with cheaper dollars. 20 years down the line. So that's sort of my way. I am, certainly with these rates. I mean, I invest in personally as well in some debt products. So, that's one way to do it. But I am pretty much just buying hard assets. I like hard assets. They're going to hold their value. Uh, they'll inflate your debt away as you hold them, and you can pay with cheaper dollars. And it says, again, as Russ has always said, I can hedge the dollar by having fixed debt and hard assets. So I'm sticking with that.
Love it. Awesome. Thanks. Russ, let's have you jump in there.
So I think the first thing we really have to do is kind of identify when we say the word inflation, what we mean, because there's a whole lot of different definitions of it. The strict definition is you print a bunch of money, relative to production, and you have more currency chasing the existing production. That is technical inflation. When your productivity gains, like from technology or now AI or whatever, that actually puts downward pressure on prices, but has really sucked up all of the cost savings we should have been getting from these productivity gains. And so it's hidden inflation. And then when you look at consumer prices, they're going to be a factor of, supply and demand. So in like an example with real estate right now, you have a lot of people sitting on 3% loans are not going to put their house on the market so they can go buy a new house with an 8% loan or a 7% loan. So you get an inventory problem. And so sometimes prices will go up because of supply and demand imbalance. It has nothing to do with how much money has been printed. And the third one is credit. When you have the ability to pull purchasing power in from the future, then it's going to create more bid or more purchasing power in the future, but it isn't really currency, it's credit. And so it works both ways, right? More credit, more currency is going to be inflationary. And then when you have more demand than supply, you're going to have prices rising. And on the flip side of that, the opposite. So real estate, for example, we learned in 2008, even though there would have been a lot of inflation because the Fed took their balance sheet from like 450 billion to 800 billion to 4.5 trillion. But we had asset price deflation. Why? Because credit markets broke. And when credit markets broke, all that purchasing power of the future stopped kind of pumping into the real estate class. And so and into stocks also. And you had just a lot of asset price deflation, even though technically you could make the argument for inflation. And at that time, I'm sure David remembers, gold was actually going up because now you had a situation where it wasn't going up because of inflation. It was going up because bonds, which was a safe haven, broke completely. And everybody ran into gold as a safe haven. And so I think that you can talk about inflation and just try to make these general statements, but I think you really have to look at the market you're in. There's markets, we're talking real estate, where because of economic conditions, people are moving out more than they're moving in, right? Other markets are just the opposite. But it's also true in asset classes. Money moves in disproportionately to different places for different reasons. Money comes out of bonds when credit markets are breaking, flows into gold. We've been watching that. When you jack up interest rates, it destroys bond values. Credit markets get very difficult. And so until there's stability and someone wants a safe haven, they're going to pile into gold. And now we got Bitcoin. And who knows? So I think you just need to understand what inflation it is you're really talking about and understand inflation can exist, in my opinion, without prices rising, but you're absorbing future productivity. And that's why when inflation finally broke, it wasn't transitory. It lasted. And I think, Bronson, I think you were in the presentation I did on the Investor Summit where I had the whale. And I said, hey, when this nose comes out of the water, that whole thing's coming out of the water. It's not going to be transitory. And so I just think that when you're trying to invest, if you're going to smooth out all the ups and downs in the short term, to Tom's point, you get a 30-year mortgage on a piece of property or a 20-year mortgage on a piece of property. All the little ups and downs along the way are interesting. It doesn't really matter, right? If you're trading and you're trying to get in and out of positions in a week or a month or whatever, like a stock trade or something, that's where you're hanging on every little thing that happens. So what kind of an investor are you? What are you investing in? What is your time frame? And which part of inflation is the most concerning for you? And I think narrow your focus, really getting to know the part of inflation that really matters to you and what you're actually doing.
Yeah, Russ, I think that's a great point. Just figure out what your goals are. And for most investors, I think for a lot of the time, they're too short focused. They're not looking at the long term. And so, unless you're, like you said, a day trader or doing things that are here and there, if you know And a lot of people on this webinar live or on the replay, there's a lot of people that have a lot of wealth. And so it's, how do I grow the wealth that I have? How do I do what's right for the long term and really benefit over time? And really, what are my goals when it comes to investing and inflation? David, what are your thoughts?
Yeah, I'm going to pivot a little bit, but I think it's right in line with this theme. And this is the first question that's come in. It's from Howard. It says, in my opinion, the national debt trumps every variable: rates, interest rates, taxes, etc. Hard assets makes total sense. Precious metals invaluable. Your thoughts? Well, my thoughts are actually going to align with Russ and Tom, because my basic premise for the average Main Street investor is, why precious metals and why now? And the answer to that has been answered by both Tom and Russ. And that is, we know over a long period of time, 20, 30 years, they use the mortgage, that if you're not looking at the squiggles in the daily charts and trying to trade in and out or flip a house, you know that the dollar is going to depreciate over 10, 20, 30 years. So you don't want to save in dollars. If you save when you're 20 and you save for 30 years, that dollar's value 30 years from the start is not going to buy the same thing that it did when you started saving. So how do you save? You save in precious metals. Why? Because the value of those metals is more or less constant. The price changes, but the value of what they'll purchase in oil, in real estate, in an automobile, in insurance, or whatever you have to purchase will pretty much remain the same. So therefore, I advocate, especially for young people, learn how to save. If you read The Richest Man in Babylon, what does it teach? Save 10% of your income and put it away and don't touch it. Let it compound. Compound interest is the eighth wonder of the world. And I'm not against compound interest, but we had what? A decade or more of zero interest rates. So how do you compound at zero? You don't. Point being that you can overdo it in any asset class, in my opinion. I'm a hard asset guy as well. I do have some real estate, but I'm not all precious metals. And I think that the right amount isn't the right amount for everybody, but a rule of thumb is about 10%. So if you're saving that 10% and you don't know where to go, and you save it and you just get the discipline of saving, you save in precious metals, I think you're going to be far ahead, especially going forward, until we get back on a true basis of a real economy where, let's say, there's more truth and integrity in the system and there's not as much leverage, because we're over leveraged right now. We need to get back to more or less an even keel. And that will happen, but it's not going to be, in my opinion, by growing our way out of it. I think we're just going to have to reprice a lot of things and get back to the market determining for us what the true value of different asset classes are. For example, I truly believe the stock market is way overvalued by any metric you care to use.
So we thank you for sharing. I wanted to just do a poll of the audience and see who is invested in precious metals. So we got not everybody participated. We got some participation here, but it shows about 45% don't have any yet. And about 25% have started kind of dabbling, and only 30% are heavily invested. I imagine some of the heavily invested are following you, David, as well. And I was not invested at all in precious metals about 5-6 years ago, and I've gone pretty heavily invested. I would say 5 to 10% of net worth. It depends obviously how much you have. I know some people that are 50% of net worth.
And how's that worked out for you?
It worked out pretty well. I'm pretty happy about it. Yeah, but again, I don't look at it like an investment, right? I look at it like a store of value. Just as you said, David, you can store dollars, but we know if you store dollars, savers are losers, right? So if you store things that actually, and then not only are you storing purchasing power, right? You're storing purchasing power when you're storing something that's monetary. There is actually a method to borrow against it. Actually, Russ Gray taught me this, that you have it in a third-party vault. And then you just pay a storage fee of 0.5% per year, and then you can borrow at rates kind of like a HELOC on the equity that you have in your gold or your silver. And so you're paying 9-10%, but it's just however many days you need it. So anyway, there's some unique things about liquidity to be able to do with that. Let's just hear.
Wait, Bronson, let me just jump in real quick.
Please jump in.
Sorry, I don't want to be a mic hog, but there's something both these guys said that I think everybody needs to hear, and that is the debt component. You're talking about borrowing. Tom talked about borrowing. Borrowing or having debt on your balance sheet is a way to short the dollar. And so when you understand that, and then you use real estate as a vehicle to accumulate the best debt there is, and the streams of income and tax breaks to make that debt serviceable, then hold it over the long term, to Tom's point, then inflation becomes your friend, both on the income as the rents go up, but also on the equity. And at some point, you can recycle that increased income into the increased equity and convert the equity on your balance sheet without realizing the gain and paying a tax from real estate, where it's very dependent on credit markets, and push it over to precious metals, where if the credit markets break and it takes the equity out of the real estate, you're actually going to see a gain, likely, if past is prologue, in the precious metals. And I don't like to use the word invest and precious metals in the same sentence, because I think that, to me, an investment is something that's going to cash flow. Everything else is a store of wealth. And so the essence of investing is to accumulate the efforts of others. You start a company, you hire employees, you make a profit on their labor. You make a loan, somebody goes out and does real work and pays you a percentage of interest on the capital that you gave them. They're working for you, if you will. Obviously, if you own an investment property, people are going to get up every day and go to work at a job. They're going to pay you part of their income for living in your property. So if you stay focused on what you're trying to do, accumulate debt so you can be short the dollar, convert equity into something that's very, very resilient with no counterparty risk, which would be precious metals, and then focus on accumulating the efforts of others rather than just trying to buy low, sell high. And I think if I developed all of that, having done it completely wrong in the run up to 2008. And, when I had a chance to sit down in the rubble of all of that and say, knowing what I know now, what would I have done differently? The things I talk about today are what I would have done and should have done if I would have known what I know now then.
I'd put a new question for a new poll in here. If you're listening, you can jump in there. Which investment are you most excited about for 2025? You can take a look at that. I'd love to get your vote. Tom Burns, anything you want to add about precious metals to the conversation there?
Yeah, I was a little late to the party as well. But one of the best things I heard was that, 100 years ago, an ounce of gold would buy you a pretty nice suit. And today, an ounce of gold would buy you a pretty nice suit. So it just holds its buying power. And I saw somebody put in that they view gold as insurance. And I said that one time to a good friend at a dinner table on a cruise. His name was Russell Gray. He said, "No, Tom, gold is not insurance, it's money." And I totally agree. And so, yeah, I've got the precious metals, and then where is Bitcoin going to fall? It is a good store of value, right? Or a store of value right now. Who knows where that's going to end up? But I like my precious metals. I like seeing it go up. I like being able to borrow against it, and you put it in the right vehicle, it'll do fine for you. So it makes you sleep a little better at night, because there is, as Russ says, there's no counterparty risk, and you've always got it there in case of an emergency or something.
Absolutely. I'd love to talk a little bit more about metals in relation to this. We're going to finish this poll now. I'll share these results with you guys. So which investments are you most excited about for 2025? We will take some questions here in a few minutes, but the highest was 41% real estate, 18% cash flowing businesses, 16% oil and gas, 10% crypto, precious metals, 16% as well. And I think, obviously, I'm one that's, hey, it's not one, it's multiples, if not all of these, right? And so the one thing I will say, and I know we got a couple of real estate guys here, is that the thing that, and I want to just have a conversation around cash flow, because the thing that's happened in real estate deals, particularly new real estate deals, is that cash flow has dried up. There's two things today in 2025 that I'm seeing that are generating cash flow, which is really what allows you to leave a job. It allows you to leave a business. My book's called Fire Yourself. It's just, how do you actually get to where you can leave? Well, you got to have money coming in. And so if cash flowing businesses and oil and gas are really doing that, some stuff that we've done a little bit in. What are you guys seeing as far as, I guess, cash flow, as well as, or some of these other opportunities? What's the outlook for real estate, whatever your focus is right now, either personally or in your business? Why don't we start with Tom this time? I know you just shared, but we'll kind of work our way back around here again.
Yeah, sure. Real estate, like everything's a two-sided coin, right? Or maybe a three-sided coin, depending on if you're standing on the edge or not. But, on the one end, we were developers, right? So I can tell you, as somebody who's got a lot of projects still in development from pre and during COVID, that it's mostly outflow right now. Everybody's asking for money. It's a lot of supply, oodles of supply. And so it's a tough time to have property in development right now, but they're going to be okay in time. Life is waves, right? And real estate goes through these waves. And so, times are going to be up and times are going to be down. Probably we believe a good time to start developments now, because the supply is really starting to drop off. I think we just peaked, and we're going to either peak in Q1 or Q4 was the peak. So supply is starting, the deliveries are starting to decrease. So we are excited about in-place assets currently. We're buying assets, but a little contrary to what you said, I am a real estate homer. We're buying real estate properties, but ones that cash flow, that truly cash flow right out of the bat. They're really hard to find. You've got to look at you got to kiss a lot of frogs to find them, but they're out there because the capital stacks are distressed. The properties themselves are not necessarily distressed. And so if you find the right one, things work out. Now, sometimes you can buy a property for the debt that's owed. Sounds great, right? Home run. But these were people that, borrowed at 80% LTV, and they had a 30% drop in value. So it's not necessarily a good deal. So we like that. And so I will tell you that I'm a real estate guy. I also personally, I like to invest in debt. You can get equity-like returns in debt right now. Peel off the taxes. I hate paying taxes. I don't pay taxes because I'm a real estate guy, or many. And there's not a lot of tax benefit to that, but give me 9.25% after tax on something that's doing well in the debt market. I can live on that all day. So I like debt. It's not going to last forever, but it's got a runway. I still like real estate because that's the long-term play, and if bought right in good locations, it's going to be fine. And we're going to use that debt, and we're going to short the dollar, like Russ said. So those are the two I like. And like you said, I look at play with a little crypto. I like the VC space and startups and things like that. And then oil and gas is always there. But oil and gas, there's a reason they give you all those deductions in oil and gas. It's great. It's what the government wants, but it's a pretty risky endeavor, and you don't always get the oil out. So anyway, that's my rambling talk on those 5 asset classes.
No, thanks for that's really good. I like to, you brought up a good point that debt in real estate often now is paying like equity was a few years ago. We've seen debt funds sometimes in the 9, 10, 12, 15% that, without the risk. I mean, without the same risk as an equity position, which is amazing. David, why don't you jump in here? What are you seeing as far as opportunities for this year, personally, in your business, just things that you look at as far as opportunities right now?
Well, I've been thinking about this before this forum, and so I may get laughed out, but I'm a risk taker. So here's my thought. It deals with real estate and precious metals. So the commercial real estate market in the United States is in dire straits. And a lot of people with big money are buying, skyscrapers for pennies on the dollar. So I had this thought. Again, I want to defer to my two friends, Tom and Russ, to bat this apart. I think if you could get something in the commercial market cheap, then I would turn it into a private vault. Private vaults were extremely important in the 1970s when we just left the gold standard. A lot of people that were older than me at the time and my age, the early adopters, thought, I should save in precious metals, as I outlined earlier. And one of the best places to put it is not in a bank, because when you put it in a bank, they can have access to your safe deposit box in most states, not every state. You have to look it up state by state. So to buy a defunct bank's safe deposit boxes, you can buy those for pennies on the dollar. I've already looked at a few, haven't put this business into practice. So you buy something in the commercial real estate for 40% of its going value. You buy some discounted safe deposit box and you open up a private vault. And this is one of the best real estate businesses I know, because you're running a 4x2 box that goes in 30 inches for $400 a year, but there's 500 of them per wall, and you've got 4 walls in this building. And yeah, you had a higher security. There's only one other, I'm rambling here, one other real estate business that I found out was one of the best ever. I happen to be, believe it or not, in a coin shop, talk to a gold guy, right? And I'm overhearing this phone call, and it's obvious this guy is pretty well off. I don't know who he is. I have no idea. But the dealer gets off the phone. How can I help you? I go, God, I couldn't help but overhear some of that. And I'm kind of curious. I mean, it's none of my damn business, but what does this guy do that you were talking to? He goes, oh, he owns 4 parking lots in Los Angeles. Bingo, the light came on. I go, man, now that's the right real estate market. You put that asphalt You put some lines on it and you got maybe one person there and they rent those spaces day after day. Phenomenal business. Now, the reason I didn't like real estate that much is I started young, I over leveraged, and I had people that didn't pay the rent, but yet they had a new car in the driveway. And that kind of turned me off. I do own real estate. I'm not against it, but I'm always looking for that little special part of real estate, like a parking lot or a storage facility, that you really don't have to deal with too many people. So
So
you
they,
guys could shoot that idea apart, but that's a thought I had before coming on board here today.
so private vaults and parking lots. I love it. They say the riches are in the niches. So if you can figure out what you do and just do that and do it really well, I think real estate is full of great niches. Um, Russ, anything you want to respond to that, or also opportunities you see either just overall, like in real estate, in different investing opportunities you're looking at as an investor?
Um, Actually going to kind of jump in a little bit on this, this previous topic, because, if you heard David talking, really, he's talking about investing in a cash flowing business. Just happens to involve real estate. And if you really think about it, oil and gas is real estate, precious metals is kind of real estate. I mean, at least a mine would be, once it's out, it's not. Then most businesses, unless they're like an e-commerce type business, are going to involve some degree of real estate. So and the other thing is, Tom was talking about high yield debt, and a lot of people don't understand how you get equity out of debt. But when you buy debt for pennies on the dollar and then rehab that debt, you might buy something. You might buy $100,000 note. They owe you 100,000. You buy it for 20,000 because it's distressed and the person needs the cash. You rehab it. And then all of a sudden you can sell it for 40 or 50,000. It's a big equity play. It may cash flow a little bit along the way because the coupon on the debt is very high relative to your capital investment because you bought it for a discount. So it's having coached a lot of real estate people over my career, I know a lot of them just do not understand the debt side of it. I was at a show the other day, and a company we probably have all heard of. They do a lot of advertising. Why Refi? What they do, they told me, they go out and they buy distressed student debt. They rehab it and they pay their investors, a fixed rate of 10.25% or something. I think payable monthly, whatever that, comes out at 0.8 something. And they make a great profit and can afford all this advertising because of that equity build. The other part of it that I wanted to talk about was the notion of thinking as in terms of a portfolio. We throw the word portfolio around, but most of us don't really have a portfolio strategy, especially on the real estate way. We do deals. And our portfolio is a deal where we've got a capital stack, we've got a stream of income, debt, and that's our portfolio. And when you have a low yielding piece of real estate, you can goose it by adding high yielding debt to that mix and make the debt part of the portfolio. And a lot of times people don't think that. They get stuck with, how am I going to increase the cash flow? And they start paying down this 7 or 8% loan when in fact they could take the same capital and get a higher yield by just buying a high yielding note. And so I would encourage people to think in terms of a portfolio and how to solve your problems on a deal with a portfolio solution. And then the last thing I'll say in terms of which thing I think is going to be most exciting right now are going to be cash flow businesses. And the reason is because I think I read a statistic that something like 45% of existing businesses, small businesses, are currently owned by boomers, and boomers are going to be divesting. And sadly, the kids, they want to be internet influencers. They want to get rich on Bitcoin, and they don't really want to do the boring work of actually getting up every day and managing processes and customers and people and doing that. And so I think those businesses are going to change hands, and there's going to be an opportunity. And part of that opportunity, just like real estate, is going to be the owner carryback. So the financing is going to be great. You marry that to the fact that we now have an administration that, at least in terms of how the small business community, the National Federation of Independent Businesses and the small businesses community, the surveys say that their enthusiasm is off the charts. So, my new brand, Main Street Capitalist, is going from being kind of the co-host of the real estate guys to really talking about Main Street capitalism, Main Street businesses. I think there's going to be a ton of opportunity in Main Street entrepreneurism, which will include a part of real estate. But it'll also include actually running these, types of businesses and creative uses of, in David's case, distressed property and repurposing it into something useful. I drove by an old mall the other day and it was like, this place was a ghost town. And I think somebody creative is going to figure out a way to repurpose that amazing piece of real estate. So I think for people that are willing to roll up their sleeves, get creative, belong to masterminds where people are brainstorming, put them in a situation like you, Bronson, where you can raise capital when you find something that makes sense and act quickly to take advantage of an opportunity. I think you're going to be able to generate a lot of cash flow off of small businesses and maybe even marry that to your own real estate portfolio, and create streams of income, when you flip the business and then take the carry back on the back end.
Yeah, that's something we're working on. I'll share in a minute. We've got a business that we're buying that's a cash flowing business, and I love it. I mean, it's, stuff that was, 5 to 7 cap rates in multifamily. We're seeing 30 cap rates or 35 cap rates, just amazing. And those are the things that really can create some life change for people to have cash coming in. And so looking for those opportunities is great. We're going to take some questions now. So there is a box in here called the Q&A box. So if you can put your questions in there, it looks like we've got a few questions coming in. We'll go ahead and start taking a few questions here. Here's a question here from David. My real estate portfolio is multifamily bought in the last 2 years at a discount. I feel great about the cost basis. Multifamily is one of a few assets that's cheaper now than it was 3 years ago, which is really important to point out that it's still cheaper from a cost perspective because obviously interest rates are higher. I did 4 oil and gas investments last year. Should I be concerned about falling prices with Trump's energy policy? It will demand with a robust economy and worldwide. So the question is really about the pricing of oil and gas. Do you think that it's going to be stable, or do you think it's Trump saying, drill, baby, drill, that the price is going to come down or crash with oil and gas? Who would like to jump in on this one?
Well,
Me.
it's gone up $10
there
here
you go.
recently. I think on the long term, I think oil's going higher. On a short-term basis, I think it probably will level off and maybe go lower for a while. So it's really hard to answer. I mean, all markets go up and down. What a profound statement. But I am a believer in peak oil, and I'm one of the few left. But that doesn't mean you're out. It just means it's more expensive to get it out. And that adds to the cost basis of it. So if you look at the fracking market, for example, it's been a huge boon to the United States. We've become at times net exporters. But again, you got to look at what is the cash flow and the depletion that happens in fracking. The depletion is severe. You lose about 70% in the first 2.5 years. So that's a steep depreciation curve if you're comparing it to real estate, for example. So I'm bullish on oil long term. I don't think the Trump administration will have as much effect on it as the market itself. And that's because no matter what magic wand or what executive orders are proposed or put into effect, that market does not move real rapidly. And so they're cautious, because if you're at the margin and it's going to cost you $70 per barrel to get it out, a barrel equivalent, if you're equating it natural gas to oil, and you're at an $80 price, you're probably not going to borrow any money to go into business. So that kind of takes care of itself. I hope it answered it. It isn't I know the answer because I don't, but there's ways to think about it to calm yourself down maybe and not get too worried about it. I don't think it will be as a dramatic a move until we get into what I consider unsustainable inflation that people fear. And I don't think we're getting there this year, 2025, but I think we're going to approach it by the last quarter of this year. That's my take on my analytics currently.
Okay, great.
Hey, Bronson, let me jump in on
Please.
energy because I just think it's so important, and it affects everything, and it's a big, big part of the Trump agenda. So I think, first of all, just have to understand there's exploration and then there's production. Exploration, very risky, got great tax breaks, but it's high risk and a lot of dry holes. And so production can be where you're buying a portfolio of proven producing wells. Then you're just kind of betting on the people that are developing it. And you have to look at the deal. A lot of it's dependent upon the price. And so you have to look at what is the cost basis of the developer and what they have in the deal. And so the question really is a good one, is what's going to happen to price if we increase all this supply? And I think there's two parts to it. Pay attention to the geopolitics. China is the biggest consumer of oil in the world right now. Russia is one of the biggest producers. Saudi Arabia has been toggling back and forth, kind of walking the fence between, am I going to be loyal to the BRICS? Am I going to be loyal to the US? Depends on how things break. I think they're going to be leaning back more towards the US in a Trump administration. It's one of the things I'm going to be watching. And I think that if you realize that a lot of the world is nowhere near advanced as the United States, there are billions of people every day getting up trying to make their life better. And as they progress in that effort to make their life better, energy consumption is going to come with it. Trump understands it's not just production, but make a market. I'm going to watch his geopolitical and foreign policy to see if he is doing things to open up markets for the U.S. He understands the importance as a statesman to facilitate trade, not just, so the tariffs, I think, are really more about getting leverage than he actually wants to do it. Just like I think he's asking for the debt ceiling to be removed, not because he wants to spend money, because he wants to take that point of leverage away from Congress. They can't threaten a government shutdown if there's no debt ceiling. And now he can bring them to the negotiating table and they have less leverage on him. Sidebar. I'd encourage people to visit oilprice.com. It's a website I go to, a newsletter you can join. They do a great job covering all things going on in energy. They talk about geopolitics. They talk about currency, Federal Reserve. They talk about BRICS. I found it to be very, very useful in me developing my understanding of energy. But I think the bottom line with David, I think that they're going to balance out production against making new markets and consumption. I don't think you're going to get a lot of inflation in energy, but I also don't think you're going to get a big crash. I think it's going to be fairly stable. But then you just have to watch all the things that affect it. And that's too much to go into here. Just go to oilprice.com and start reading those articles.
So there's a few questions here. Thank you to our panelists. A few questions around buying precious metals. Where do I buy precious metals? I would say find a reputable dealer. If you email me, I have a recommendation. We're not incentivized. I just somebody I buy from. I'm happy to share that. Somebody else is asking around basically, is there a company, I know there's some creative things around metals, but that you can basically hold your metal and issue a credit card to draw down without fees? There are groups, I feel like there's some groups that do that, David. Is there a group that does that where you
Well, there's a friend of mine here in Spokane that did it, and I have one. Unfortunately, the bank isn't taking any new customers. You can go to some dealers that will let you purchase and put it up as collateral and borrow against it. But as Russ pointed out, the loan rate's pretty high. She's around 10%. There are some cryptos that are credit card backed. Kinesis is one. Someone asked, what's the best way to get started? I started to type an answer and it went away. Ego aside, type in 10 Rules of Silver Investing by David Morgan. I go through 10 rules that'll keep you safe and sound and not make a big rookie mistake. And this last one here, he wanted to know, should I wait for like the top in 2025 before I convert my metals into a real estate investment? First of all, anyone who wants to buy a home and save metal, I always tell them, look, buy it now. I mean, if you got something you love, your own home is really priceless. I don't look at it as an investment. I don't really look at Southern Gold as an investment, as Russ said, although I probably use the word all the time, but it really is money and it's a way to save judiciously. But if you want to buy some real estate for cash flow or whatever, I would not wait for the metals to appreciate before I did it. I just do it now. The second thing is, I don't think the metals are going to go much more than a big trading range for the first 6 months of this year anyway. Now, am I right or wrong? Time will tell. But if you got a good investment, I mean, the reason you save is to do something with it. So if you save in metals, you're saving for a purpose. If you're saving to see how big your stack is, well, you're probably saving for the wrong reason. If it's to put your kid through school, to start a business, to buy a cash flow property or whatever, that's the idea. Should we all own metals? Yeah, I believe we should. I think all of us should save in metals and kind of diss the dollar. But regardless of my beliefs, there's a purpose for it. So I probably overtalked it. But yeah, people seem to get almost religious around the metals at times. And it is a way to save. It's the safest way to save in this type of an environment, especially as this inflation monster starts to rear its head again. But that doesn't mean the regular on the street main economy doesn't continue. It does. And that's where you want to look for opportunity, as I outlined in my kind of funny but possible example. I mean, the repurpose is the word I wanted to use. There will be these defunct buildings that will be used for a greater purpose at times. We just don't know it yet. But some entrepreneurial type will come along and say, you know what, that's going to make a great XYZ apartment building, gaming salon, Bitcoin exchange facility. I don't know, but they do. And that's the beauty of a entrepreneurial mindset, is you can take what exists and make it better, or you could create something that doesn't exist now and put it into reality.
Thank you. We're going to take a quick pause here just for a minute. We've got a couple more things planned for the top of the hour. Just wanted to share a shameless plug. I have a cash flowing business deal that we are offering right now. Again, I wanted to say this real quick. The panelist appearance on this panel does not indicate endorsement. Okay, I just want to say that because this is our deal at Bronson Equity. It's not anybody else endorsing this deal. Well, a quick little thing about it, then we'll come back to our panelists here in just a minute. This is a e-commerce business, so it is not a any sort of physical assets, but it's high cash flow from day one, a 15 pref, projected 3.0 equity multiple in 5 years. The founders are staying in the deal. There's a unique reason why they're selling. It's accredited investors only. We're over halfway on the raise already. We're raising $3.2 million for it. We'd love to tell you more about it. If you are interested, I will stick the link in the chat. You can go ahead and fill that out and get more information about this deal. It's called Nimbus. Would love to share with it a little more about it. So let's go around to our panelists. Maybe give a closing thought, as well as how people can get in touch with you. So maybe a takeaway that you had from this event, just take about 30, 60 seconds, and then just how people can reach out with you, connect with you, hear about what you're doing. Let's start with Tom Burns. Oh, let's share mute there, Tom.
No tech here. Yeah, no, I think we all learned a lot. I think we all realize that everybody's kind of thinking about the same thing: inflation, rising costs, things like that. I wanted to say one thing, just to tag off a little bit on what David said. He said, we're saving to do something with it, right? And you may not find the quote, a physical investment you want to make, but you can always invest while you're saving that capital, and you can invest in your education. Like Russ said, you can invest, you can join masterminds, you can go to certain websites. So you can always be doing some investing. It always doesn't have to be with your money. But I think we've all learned a lot. I think we've got an exciting 4 years to go. And I think, I think the world of investing is always fun. It's always exciting. And there's ups and downs, but that's why we're here, right? If everybody could do it, if it was easy, everybody would do it. So that's really all I got to say.
Great. Thank you, Tom. Thanks for being here, brother. All right, let's go to Russ.
Yeah. So I agree with Tom 1,000%. I think that education and really the mastermind groups are more important than ever. One of the things I put a lot of my time in, we've got this, we call it the Collective Inner Circle Mastermind with George Gammon, Kenney, McElroy, Robert Helms, myself, and Jason Hartman. And two of our members are fairly notable: Mike Maloney, very, very well-known gold guy; Dana Samuelson's also a member. Robert Kiyosaki is a member. So we all get together. We just got back from Dallas. We get together 4 times a year, plus we get on calls throughout the year. Every month we're on several calls. And the reason we do this is because it's how big of the picture can you see, and how fast can you read and react? And when you're actually facing a decision, with how fast information is coming, the reason I think this is important is because we're already seeing in 2 days of the Trump administration, this guy is going to be moving very, very fast. And you've probably heard the term disruptor attached to him and his administration. It's going to be very disruptive. Hopefully it'll be disruptive in mostly a positive way, but disruption is disruption, and the old rules will no longer apply, and things will be changing very fast, and something might go wrong and break, and it's all going to happen very, very quickly. If I would have had a mastermind in 2008 when everything started to change very quickly, I probably wouldn't have been on the wrong end of that shift. So I think that the most important thing you can do is get plugged into, I'm preaching to the choir, right? Because they're here, but continue to do this kind of thing where you're getting other viewpoints and plug in, and don't miss a day. It's really, really important. Make sure you got people on speed dial that can actually take your call and will answer your questions.
Great, Russ. I can't agree more. I mean, I couldn't agree more. The masterminds and the groups and getting around like-minded people is so important. I've grown so much through it in so many ways. David Morgan, closing thoughts, and how can people get in touch with you?
Yeah, I'll just go with the flow. I mean, I agree. Investing in yourself, physically, mentally, spiritually. Shameless plug. I was asked to write another book and I gave it some thought and I decided no. So I've decided to do a documentary. You can find out more about it. Its URL is silversunrise.tv. One of the interviewees is Gia Griffin, creature from Jekyll Island. I have many other notables, one of the best constitutional lawyers in the United States, uh, Ellen Brown, that wrote Web of Debt. And it really talks more about the spiritual side of money and how much money has control over our lives. And really, when you are self-realized, whatever that means, but you really true to yourself, as the Oracle of Delphi said, you understand the big picture. Why we're here, what are we doing? Are we here to be selfish, or are we here to serve others, or do we have a purpose, or don't we? If our main purpose is to, buy Bitcoin and live in the basement and retire rich, that's not really much of a purpose in my view. Trying to be funny, but the point being is that I'm trying to give a big picture to life itself and what role money plays in it, because it's not an end in and of itself. And so I'm trying to put that aspect out there for everybody to contemplate. So again, silversunrise.tv, I suggest there's several trailers up there. You can watch the trailers and get a feel for the movie. Hope to have it accomplished by the first quarter of this year, which means the end of March 2025. And once it's up and completed, I will be promoting it, and hopefully, Bronson, we can have a chat about it after you watch the documentary. So I'll end
Love
it.
to. Yeah, that'd be great. I just put the link for the website in there. Again, it's not out yet for those that are curious, but I just want to say truly thank you to each of our panelists for being here, and for each of you, wherever you're coming in from. This is the stuff that makes you better, right? Being a part of this, taking time when you could be doing other things or watching TV or whatever. You're doing this, right? You're really paying attention to what's happening, and I love being around amazing minds talking about investing, talking about finance. So I'm hoping for you this year, 2025, is your best year investing, that you make some great moves that really set you and your family up. And there's always opportunities, right? So if we're paying attention, there's always opportunities to learn. Just kind of like Russ said, I look at it like finance is like a board game, right? The rules are continually changing, but the game continues on. And so just really want to encourage each of you with that. First of all, can we give some love to our panelists? Just say thank you to them for being here, for taking their time to do this. We will share this replay with you, so if you want to go ahead and put it out. But again, we do this every month, so we will do it again around this time next month on a Tuesday. I think it's going to be February 18th. We'll have some more conversation with some amazing experts. Again, if you are new to our community, the Bronson Equity community, just want to say welcome. Thank you, everybody, for being here. Thank you to our panelists, and Happy New Year, everybody. This is great. It's great to be able to kick off a few weeks into the new year, this awesome event. So thank you guys so much. We'll go ahead and wrap at this, and thanks everybody for being here. Thanks for all the nice comments too you guys are putting in there, and thank you to our panelists as well.
Thanks, Bronson.
Thank you,
Thanks, guys.
Bronson.
Thanks so much.